So thank you guys for coming today. This is a webinar on prop trading and why we believe prop trading is really the way to go nowadays. It's always better to trade on somebody else's money if you can. So now, don't get me wrong, everything we're going to go over, you can absolutely trade on your own money. It's just why would you if you have access to a prop firm? And if you have a bad day, it's their money. So you're going to hear from Patrick. Patrick has what series 3766 was 37.
766, 334. Yeah. Hype.
Okay. Spent I think every time we do this slide, I change the number of years that you were in the profession. I think last time it said 23, this time it says 20 plus. We're just going to go increments of 10. You're closer to 30 than you are to 20.
And 20 plus is safe.
Yeah. So the method Patrick developed is called the modified market profile. So market profile itself isn't new. It's just it used to be charted by hand. It was developed what in the 70s, Pete Stoudemire, I believe.
Actually, the 80s by Pete Stottlemyre.
80s.
It was
Okay, before
commissioned by the
computers
CME
became a
group.
thing. And then once computers took over, it became a lot easier to get the information. But this method he's taught thousands of people over the years. He's been doing this a long time. So not only that, you traded on the floor for Wachovia, right? Traded CDOs. So if you guys
Collateralized
aren't
debt
familiar,
obligations. So I know a little something about debt and
yeah.
risk.
So very risk adverse. Myself, now see this is messed up. Mine should say 20 plus and yours should say 23. So I have some experience in the financial industry. I worked for one of the largest banks. I've been prop trading for years. I've been in the education space a decade now. So I've been at this a while, not as long as Pat, but according to the deck, we're going to go with the slide. I've been doing this longer than Pat. So when you trade, there are risks that are involved. I'm not going to read this to you. You guys can read this yourself. But at the end of the day, we're not financial advisors, although Patrick probably has that license.
Yeah.
So trade with money you can afford to lose or use a prop trader. At the end of all this, our big thing here is if you have to make a decision about whether or not you can afford to trade, we don't want you. We don't want you to have to decide if you're going to have to pay your car note or your mortgage payment versus pay for any education. That's just not how we roll. So, what is prop trading? For those of you who don't know, it's one of the fastest growing industries right now in the trading sector. It's pretty widely accepted across the board, but it is still relatively unregulated. Now, we're one of the few companies that have probably been there since the beginning. So, at first, Pat will probably be the first to admit he wasn't a big fan of it. Once he started to learn more about it and understand that his methodology has helped a lot of people become funded traders and they actually are getting paid out, it made it a little bit easier to stomach on our part, right? Because uh, I'll say it at the beginning, it kind of felt very like MLM-ish or kind of like a Ponzi. It's as bad as that sounds. It's you're paying for an eval to trade somebody else's money. What's their benefit? Well, once you really get into the nuts and bolts of it, it makes a lot of sense as a trader if you don't have the risk capital or you don't want to risk your own capital to begin with. Anything you want to add to that, Pat? Feel free to go ahead and
Yeah, Joe, the
chime in.
rules then, and we're going back 15 years, with the company that we were with had started their own prop trading firm. The rules were utterly draconian. They are much easier now. It literally used to be winning percentage, how many trades you had to take minimum in a month, how many days to, well, if you took that final trade to pass your eval and you weren't holding your left ear wearing a green sock, too bad, you blew up. And we're not joking.
Yep.
Now it's an entirely different story.
Now, one of the things too, we don't want you to just take our word for it. We have a lot of students who have done this and actually have become funded traders just in the last year. There's actually, I think I have another, uh, I'm gonna pull up some screenshots. So This is a certificate of completion. This is just from last week. We had another one of our students become a funded trader. There is a lot of examples. We're not going to go over all of them, but some of the different prop firms, like this is the Legends. Here's one from Take Profit that was in May. Here's another one from Legends. This was in November. And then we got August of last year, another Take Profit, Apex, Blue Knox for people who trade. So there's a number of different firms. There's actually another Legends one from Rhonda that I'm thinking of that she got earlier this month that I forgot to put in here. But so
Last week.
yeah, was it last week or the third? Either way, it was just this month. And she's got, what is she up to? 16 funded
16 or
accounts?
17 separate accounts
So one
divided amongst different prop companies.
and not, listen, some people can't handle more than two or three. That's fine. Some people only want to do one. She's doing 17. So let's put that in perspective. Let's just say if you were doing 10 and you just did $100 a day multiplied by 10 accounts over the course of the month, right? This is how people go from a 10 to 20, 30, $40,000 a month trading income. It's taking the small little trades and multiplying it across multiple accounts, either using a trade copier or software that's going to give you the exact same trade across multiple accounts. Now, this individual that I'm thinking of, she'll trade them in blocks of five. So if she has a bad day, it only affects five accounts. It doesn't affect all, 15 or 17. Some days she'll do more, some days she'll only do a couple. It really just depends on what the market's giving her. But if she's doing well and she rips on three or four accounts, she may do another three and do another three or another five. And she works a full-time job. She's able to sprinkle in an hour a day, maybe a couple days a week, and generate at I'm guessing at least $10,000 a month now in additional income that she's made on top of her day-to-day job, which she's retired from three or four times. But they keep enticing her back with insurance benefits. You know what I'm talking about, right, Pat?
Rhonda,
Yep. So at the at the end of all this, we're not going to sit there and tell you how great we are. We're going to measure our success based on how well our students do. And the way that we measure their success is that every trade that a student takes based on the methodology, they have to send it in to Patrick, who is going to log win, loss, or break even and give feedback on that individual trade. Now, everybody on this webinar, if you're new to prop trading, start with one, right? You start sim trading, you pass the eval, you go to a funded trader status. Okay. Our students this year are winning about 77, almost 78% of their trades. And you can see from 22, 23, 24, 5, and 6 that the lowest it's been is 71 and about 21%, 71, 21. That's a 5-year average of just under 75% win rate between the win, loss, and break even trades. And we keep a running total. We upload the screenshots, that we get every day onto YouTube. And these, we've been keeping track of these much longer. It's just, I want to say that the tracking mechanism for logging this on a day-to-day basis, I think I developed a sheet in 22 because it became really hard to measure the percentage without, using formulas. At the end of the day, we're looking at 5, 6,000 trades a year on average. So if you're winning, let's call it 3 out of 4, I think everybody on this webinar would take that every day of the week, right? Because that one loss is going to be a managed loss. So I knew that question was going to come: average win versus average loss. Pat, you wanna take what you see on average?
sure. I have no idea because I have no idea how long anybody has the guts to stay into a trade, which we give multiple trailing options. Some people stay in 1 bar stop, 2 bar stop. Some people go all in, all out. Some people let one trade run. We had
Some
a
do
trade,
micros
right, in micros. We had a trade the other day where someone let a micros trade run for 5 contracts and they made over $400 on a freaking micros trade.
on the micros, which is like a $4,000 mini trade. Now the micros have a lot more volume right now, so you get more fluid action, but um I just from what I've seen in conversations that I've had, and it depends on what market you're trading. The ES, maybe your win loss is going to be smaller than if you were to predominantly trade the Nasdaq, or if you trade gold. So put this in perspective. If you do $200 a day, just 200 bucks a day, that's a couple points on two contracts in the ES, or if you're trading one contract in the Nasdaq, it doesn't take long to be up or down $200. That's an extra $4,000 a month per account that you have if you just average $200 a day. So you have two accounts, that's an extra 8 grand. Three accounts, 12. Assuming that you're averaging $200 a day. And that factors in the winners and the losers, right? Some days are going to be better than others. But this is just a win-loss break even. And Pat, why don't you explain what you consider a win, loss, or break even when you have people that are sending you in trades? Because I imagine you get a lot of people taking the same trade based on the method.
Sure. Let's say, for example, there's a reversal long in the ES and seven people send in the exact same trade. It only counts as one win. So, for example, we were 11 wins, two losses, and two break evens. And this was a miserably slow day. Those are 11 unique wins, 11 separate, different wins. Several people took those trades. Three people took one of them, four took another one. One person took one trade. They all count as unique winners. If two people take the same loss, it only counts as one loss. That's how it works. And I don't do like some other people do when they've got their prop people who are taking one trade with five connected accounts. They claim five wins off of one trade. Okay, so we're not padding the numbers.
Yeah. If anything, we're probably being a little more conservative. So obviously, we have a lot of students have been through the program. They range from retail traders like yourselves. We've had people who had CTAs or commercial hedge fund guys, prop traders. We had former floor traders, stay-at-home moms. So it doesn't matter like what your level of experience is. The method itself can be applied across the board to anybody with any amount of experience. And we're going to get into some of the examples, but predominant focus of today's webinar is on prop trading and how to maximize your potential. Because anything you could do on one account, you could do on five accounts. You just have to get used to doing multiples, and that takes time, right? It's not like you can think of it like baseball. You can't just watch baseball and say, "Oh, I can go and step into the batter's box and hit a baseball." If you never swung a bat or you never saw a live pitch, you're probably gonna get what we call the pucker factor. And that's the same thing that traders go through, is that when you do it live for the first time, you kind of freeze up a little bit. But why are we focusing on prop traders? It's because stories like this. So this is just one example. This was a story a while back. It was in Money Wise, and then Dave Ramsey, the Ramsey Show, kind of chimed in. This kid, I'm not even calling him a man. He's a kid. He's 22 years old in Nashville. Was making anywhere between 30 and $90,000 a month prop trading, and he was making a lot of money because he was doing multiple accounts and he was copy trading. And somebody asked him, you know, why are you using other people's money? Well, he's keeping between 70 and 90% of the profits, and they're taking all the risk. Why wouldn't he? Not only was he able to pay down debt, but he was able to save his own money. And even if you got 10 prop accounts at $100 a pop, just for example, like you're spending $1,000. Well, guess what? Each prop account, depending on the size, is going to have loss limits tied to it. And let's say it's $2,000. Well, now you got three accounts or 10 accounts, right? If you have a bad day and you lose $2,000 in that prop account multiplied by 10, it didn't cost you 20 grand. It cost $1,000. That's a big savings in terms of risk. So it's just something that we essentially got behind because of the opportunity involved. And then once we started sharing this with our student base and they started doing it, they started taking some of that pressure away from trading their own money and getting that pucker factor. It actually loosened them up to trade a little bit more freely, and they follow the rules and they are able to see real profits on a regular basis. And that's really the goal. The goal of trading is to make money. If anyone tells you otherwise, they're full of it. There's only one reason why people trade, and it's to make money. Sure, you have to understand the risk involved, but you should never trade without the intent to make money. And if you do, we'll be happy to trade against you.
Yeah,
So,
I'd love
uh,
to.
so here's one of the examples. This was I think
It's
what
Rhonda.
Rhonda was talking about. So this is an example of what it would look like if you were trading on a $50,000 account with Apex. You had a profit target of 3 grand. Okay. Here's a little piece of advice, even if you walk away with nothing but this. If you're prop trading and you're going through the eval and your goal is to make $3,000 and you hit that by even a single penny or a dollar or whatever, you get to 53,001. Stop trading that account for the day because there's no it doesn't matter if you get to 54, 54,000, 55,000. When you pass your eval, you hit that initial profit target. Stop trading. They will convert it from a what's called a an eval to in Apex's case they call it a like a master account, or you go to what's called sim funding. They're universally you're still in sim, but now you're in the opportunity you have the opportunity to get paid out. Okay. So it doesn't matter if you hit the goal by $1 or 100, it's all the same to them. Then you got to do it again in sim funded, depending on the broker that you go to. And this is where we'll help you understand the rules. So a lot of times what happens, somebody gets a prop account. They inform Pat, hey, I got a $50,000 prop account. He reviews a trade. He'll go over their win loss with them, and then the money management side. Okay. How many trades do you have to lose to hit your drawdown? So how does that tie into what your max number of contracts should be? And then when do you walk away, right? This is all part of managing your money and understanding that just because you could trade 6 contracts or 10 contracts doesn't mean you should. And Pat, feel free to add more to that as I.
Yeah, may I add? May I talk about the dirty little secret with these people? So what happens when, let's just use a $50,000 account. It doesn't matter what prop account company it is. They're generally the same rules. You can trade 10 minis on a $50,000 account. Your daily max drawdown is 2,500, but you only have to make around 300 for five trading days to get funded. So why are you trading 10 freaking minis? Well, because there's A, if you trade, let's just say 5 in the Nasdaq, you're probably going to blow up within 2 trades. Number 2, there's a consistency rule for most of them. So let's say you make $3,000. Now you're going to have to make at least 1,500 the next day. Why are you doing this? You may as well trade micros, make the minimum you need to make while not exposing yourself to the maximum drawdown. So let's say your drawdown is $2,500 and what you have to make in a day is 300. You could take 6, 7 losses in the minis, in the micros, and not suffer at all. And you can still make the money you need to make without being anywhere near your max drawdown. So these are things that people, they don't realize because all they see is the $50,000 that they can trade and the 10 contracts. And
Yep.
the rules are designed this way, like the signs in Las Vegas, these big bright lights attracting you in there. Those people are not giving money away. They didn't spend hundreds of millions of dollars to give it away to you. Okay? So you've got to keep this in mind.
Yep. So obviously you have to understand a process and apply it consistently in order to get to a funded status. Now, there is a misconception. I hear a lot of this on the phones with people is that, well, there's so many rules and you got to trade by their rules and you have to trade by their method. So that's only partially true. They don't care what method of trading you use as long as you're consistent, but there are rules that they have that you have to abide by. So there's a consistency rule, which is probably what a lot of people struggle with at the beginning, is because we as traders, we tend to want to let our winning trades run as much as possible. But there's a consistency rule that usually gets implemented. So let's say your average trade's $300 and you get into a trade and you're up 300, then 600. Now you're up 900, 1500, and you close that trade out of 1500. Yeah, you're feeling good about yourself, but now your average trade, in order for you to reach that payout, you've just actually kind of screwed yourself because if you were on day five and your average trade is 300, you really don't want to go up six or eight or $900 on a trade without closing it out because you're going to skew the numbers. As dumb as that sounds, that is a rule that you all need to adhere by and actually understand. Like Pat was talking about, we have a little bit ago, we have people that want to do all in, all out, 1 bar trailing stop, 2 bar trailing stop, a structured stop, right? Inherently, you want to let things run. Sometimes you just got to take the money and close it out. Because if you go from a $300 trade to a $1,500 trade and you got a 30% consistency rule, well, that just means your biggest trade can't be 30% higher or 50% in some cases than whatever your average is. Otherwise, you're going to start skewing the numbers and that's going to delay your payout. So that is something that I encourage everybody to understand. And then, like Pat, I know you've helped a lot of people understand that in the rooms as well when they send in trades. And I think for the most part, people are pretty good at trading and getting out of those winners without it letting it run because you can always get into another trade. It's not like for the day you made $1,200. It's the average per trade. So just keep that in mind. So listen, there's a lot of rules that can get confusing, but I think we've simplified them with the process that we implement. Most people won't run into that issue because we're conditioning people to take the profit and leave.
And I also want people to just ruminate on this. You're paying a few $100s a month for access to $50,000 accounts. If you're going to trade your own money, that's 50 grand in a brokerage account that you cannot touch. The
Yep.
money is dead. And when the loss comes, the loss is real. So if you blow up and you hit your max, your daily max loss and you blow your account up, it's not, it's $100, $150 to turn it on again. Okay. You lose 2,500 of your own money, it's gone.
Yep.
It's not coming back.
Oh,
So you
that
need to
pucker
keep that in
factor's
mind.
there. So here's an example of kind of a typical payout funnel, and this is for Top Step in particular. So just to show you how difficult, because we don't just believe in blowing smoke up everybody's, what, and letting them know that, hey, yeah, you can make a lot of money trading, but it takes time, effort, and energy to get to that stage. Now, 16.8% of people advance to a funded level. Now that 33% of people, when they're at the funded level, actually receive a payout. And of that, less than 1% of the people that are express funded get actually called up to live funded. So what does it mean? What does that mean? So if you're good enough at your prop trading with Top Step and you're a funded, we'll call it sim funded. If you're good enough and you're consistent, they will actually give you live money to trade and then they kind of take all the training wheels and the restrictions off. It's not that you can't be a part of that 16.8% to get to funded level. It's just most people lack the discipline or the method to get to any sort of funded level because everybody wants to swing for the fences and hit home runs, and trading is about singles and doubles. It's not about hitting the home run. Yes, it's great to get the windfall of, a running, especially in the Nasdaq. The Nasdaq starts dropping and you short it and you're up $1,000 in a blink of an eye. That's great. Those trades are fewer and far between than those $200 to $400 trades. I'm just telling you right now. So this is same thing, just a little bit different. So why should we become funded traders, right? Or what's the process to becoming a funded trader? So it doesn't matter what brokerage or what um, prop trader you go through. You have to fill out their online, we'll call it an application just because you got to put in whatever the fee is, you got to pay it. Then they're going to give you an evaluation account. That evaluation account, depending on the size of it, is going to have a profit target and a loss limit. And that could be a daily loss limit, or it could be an end of day, it could be a trailing stop. There's a couple variations. You have to understand what those are. Once you hit your profit target, if you hit it before you hit your drawdown, you'll move to sim funded or funded status. Okay. That's when the real fun begins because now at that point, your goal is to get paid out. Now, depending on the firm you're with, they have different rules for payouts. Some of them you have to trade certain amount of days, you have to get to a certain level, and then you got to maintain that buffer range. Some of them will pay out daily. We've had a lot of people move over to take profit trading because they do daily payouts. But getting funded isn't difficult. It's the staying funded part because you have to continue to do the same thing over and over again. Like I said, singles and doubles, not home runs, singles and doubles. The You go up $200, $300 on a trade and your goal is to get to 3,000, it's going to take you less than a month, okay? Just be consistent, walk away, earn that first payout. That first payout should pay you back handsomely and then some towards anything you paid towards getting a prop account or multiple prop accounts and towards anything that you're starting to pay in your education or software or both. Okay. Then you want to multiply your payouts, right? Once you pass one account, start working on your second account or your third account or start doing two of them at a time. The key is to get as many as you can. And for everybody, it might be a little different. It might be 5 for one, 15 for other. Some prop firms will limit the number of funded accounts you have to, I've seen anywhere from 5 to 20. But once you get that, now you can start multiplying your award, so to speak. Okay. So you keep hearing me say prop account. What's a prop account, right? Well, it's account balance that you trade. As long as you stay within their parameters, you can earn payouts. Those payouts are generated through the prop firm. So you're not actually trading in the live market. They're essentially looking for the next best trader without having to put somebody through a hiring process and pay them a salary to trade their money. It's just easier to get people to pay you to want to trade your money. And you can absorb some of those losses and do some payouts as long as you find some funded traders in the meantime. So stay in the rules, keep getting paid. Now, some brokerages or some prop firms have started to limit the total number of payouts. This is where having multiple accounts really starts coming into play. So I've seen, I think it was Apex, where they may limit you to 5 payouts. So get 3 different accounts, you get payouts 5 times. You do that so many times before you become an actual funded trader. Well, that's fine. It's just another one of the rules that they have. So if you get 5 payouts and your average payout's 1,000, that's extra $5,000 that you made off of them. Well, what did it cost you to get those eval? A few $100, and you made a few $1,000. It's a pretty good trade-off. So downside, I think we've mentioned this a few times. And Pat, I hope you're still with us. I know your camera's off, but the hard part for most people is staying within the parameters. Many
Well, it just
people,
Corvus keeps walking in front of the camera.
many people will do multiple evals before they get the message. Okay. So again, this is just like anything. This is just human nature. Following rules is important. When you don't follow the rules, the only person you're hurting is yourself. And I'm gonna, I'll say this until I'm blue in the face. The rules are not difficult. It's the consistent application based on whatever preconceived notions you may have or prior training you may have. If everybody on this webinar was getting paid out from prop trading, you'd have no reason to be on this webinar, right? But if you've earned a payout or two and then you lost it and then you got another one and then you lost it, you did an eval, you got funded, but you never got a payout, whatever. There's a number of different scenarios. There's a reason why you're here. It's because you're sick of the same old grind, the same old trainings, the same old, hey, you're going to get funded and stay funded. And you've gone down that road and it didn't work. All right. There's a reason why we have a lot of funded traders in our program right now. And we get more and more every month. It's because it's consistent and it's repeatable, and we are going to hold you accountable. Every trade you take, you're going to send it in. You're going to hear the good, bad, or the indifferent.
And Joe, if I may, let's
You
say
may.
let's say Les takes a trade and he sends it in, and he's up $400. I'm going to go over that trade. I'm going to say, okay, Les, these are your options. You're with take whatever. Okay. You have already exceeded what you need to make to qualify today to go to the next day in profit. You can risk half, you can risk it all, but if you lose or you break even, you're done for the day. And then I'm also going to tell you, you're not here for your ego. You're here to make money and to keep it. That's what we're here for. And when I am sitting there, which is the only freaking guy in this business that does this, takes your screenshots, puts them up in front of everybody, evaluates them, and asks you what you want to do, it's a grounding influence on people because now you know it's real. That's
Yep.
how you're accountable, which is what most people in this business do not have someone qualified doing it for them. I am.
Yep. And it's only going to take a few times of you doing the same mistake over and over before you realize, hey, I should probably stop making that mistake. I know I'll tell you, I think the number one mistake most people make is that they try to front run the trade versus letting it develop based on the rules because they want to get an extra couple ticks out of it. And it turns into a loss that, for one, shouldn't have been a trade or should have been a trade they were never in to begin with. And, so think like what Patrick said before. If you're doing that with your own money and you lose 500 bucks at a clip or 1,000, you're down 2,500, that money's gone. You got to either refund your account or make that back up. So this is why we think being a funded trader just makes all the sense in the world right now. For one, it's a lot safer, right? You protect your own assets and you preserve your own capital because your average cost of an eval, because they're always on sale, is usually less than $100 depending on the size account that you get. Even if you want to reset that or you get another account, it's only going to cost you less than $100. Well, you don't need to have a big account funded on your own. Do the eval, and let's say you decide, hey, you know what? I'm just not good at this trading thing. I can't stomach, the movement of the market or the wins and the losses. Well, guess what? It's really easy to not get another eval account versus having to close down a brokerage account you no longer intend to use, right? But the other key takeaway of why you should be a funded trader is that it doesn't matter if you're worth $50,000 or $500 million. Your net worth is irrelevant. It doesn't matter if yeah, you got an extra $1,000 of play money a month. Take a couple hundred of that and apply it towards funded prop trading, and who knows, you may be the next person that can make 30 or 40 or $50,000 a month trading. Anything's possible. And it's a very low risk or investment on your side, and you get to keep your cash for yourself. So we went over some of this already, but just to reiterate, any prop firm that you go with, you have to understand not only what's your daily loss limit, but also your max trailing loss. What's the consistency rule? How many positions can you have? What's your profit target, right? You also need to know how many days do I need to trade in order to get to that funding status? Do I have to trade so many times per week? Some of them say you have to trade at least 2 or 3 times a week. Um, you also have to understand if you could trade pre-market or after hours, or if the trading is only during the pit session. So far, the prop firms that I've seen, one of the main rules is that you can't have a position through the open or through the close. So if you want to trade the pre-market, that's fine. You just got to be out of your positions before the market actually opens for business, and that's 8:30 Eastern time. Or you got to be out of a trade by 4 o'clock Eastern time. And then you can reopen a trade or do whatever in the after hours of the Globex. Okay. So whatever the system, whatever the parameters, just make sure you understand them and then follow the rules, abide by them. That's the key takeaway. So one of the accounts that are firms that a lot of our students use is called the Legends Trading Group. This is just one example of what it would look like if you wanted to get a $25,000, 50, 100, or even a $250,000 account. Now, if you look at the profit target on a $25,000 account, it's 1,500. It's 3,000 on a $50,000 account. But if you wanted to go to a $100,000 account, it's 6,000, right? You can see it's going up by increments here of 3,000 at that point. It's going up higher. But look at the end of day trailing loss. It's 1,500 on the 25,000, 2,000 on the 50,000, and then to go to 100,000, it's only 3,000. So it actually makes more sense to get $50,000 accounts versus a $100,000 account. And this right here, this price point, it says $185 a month. Now they've done some restructuring on how they do things, but they've had 70% off, 60, a number of different discounts.
They're like
And
the furniture business, Joe. There's a freaking sale in the furniture business every week.
right, very few people have I ever talked to paid whatever the going rate on the internet is for any one prop account. Like Apex will advertise one that's $495, but it's 90% off. So you can get it for $49.50. Like don't worry about what it shows on their website. They're always on sale. And if we don't have a coupon code, there's probably one listed on their website. So, and just so people know, we don't, like when you make money trading on a prop account, we don't get any percentage of that. Just throwing that out there before anyone asks. We're not taking any percentage of anyone's profits. I grabbed this from, this is Apex, so you can see theirs looks a little bit different. They got a no activation fee that's an end of day trail, and then they got a 50,000 that does have an activation fee. So depending on what you're getting, you can get one, or look at this. They even offer 5 packs. So again, I don't know anyone that's paid full price for these because they're usually substantially discounted. I actually think I got a text message today that the legacy accounts were 90% off. So again, you're never gonna pay full price. Now, couple things to remember. You're not excused from live market trading. What does that mean? Well, there's news cycles that go out. There's FOMC minutes. There's um, things that'll drop just before, just after the open. So they consider red dot news. What we do here is we typically will let people know, hey, there's some news event that's coming out today. Could be CPI, could be GDP, whatever it is. A lot of times the prop firms will not let you trade during news events, and for good reason. It's because the market moves so damn fast that you could be up or down $2,000 in a blink of an eye in some cases. Now, that's just their way of mitigating. So that way they're not, like I said, they're not looking for rogue traders. They're looking for disciplined traders. Okay. So, not all types of trades and trading strategies work for prop trading because not everybody has a consistent or steady system. And, those of you that like scalping, right? I've seen people take scalps where they're pulling off $50 at a time, but they're risking 275. Doesn't make sense if you're prop trading because one loss or two losses in a row versus your average win, it's going to be really hard to make money. Now, the method that and some of the examples that we're going to show you here are high probability trades. They're standard reversals based on the market profile. And we'll talk a little bit about what those reversals and inverses look like and how to qualify them. But there's also trades that you can do gap fills depending on where it closed and where the market opens. If it closes the gap, um, either way, it's consistent. the majority of prop traders, I will say, are going to be doing their standard gap fills. Okay. So, or I'm sorry, not gap fills, reversals right here. Reversals and inverses. So I actually went over this, so we're going to skip ahead. So hold on, I went the wrong way. All right, so Pat, let's go over some examples. And these are every example we're going to show you was from the last couple of days. Um, so this was on Monday, right? August 10th was Monday, if I'm not mistaken, I think. So, Pat, why don't you explain, because you probably remember whose trades these were, but
Yep.
you're
I
going to
remember
see a
everybody.
highlighted region right here.
I remember everybody. So if you go to the extreme upper left-hand corner of the screen, you're going to see a blue arrow. That's a long entry. This is what's called in our methodology an inverse. This is by Scott D. Live prop account. This is a Legends account up $606.
So, and just so everyone knows what you're looking at, there's a green line that goes across the top here, and then this highlighted region we'll call it like a mustard or gray poupon colored. And then this we refer to as an HVA or high volume area. Patrick gives these levels the night before. So these levels are usually out by what, 6:30 p.m. Eastern time?
Yeah, about 6 p.m. Eastern Standard Time. You can use them to trade in the overnight, in the pre-market, and the next day's pit session. So essentially, guys, wrap your heads around this because a lot of people don't do this. I am giving you trade signals the day before where to get in. All you have to do is wait till price gets there and apply the method if it's a valid trade, which I will teach you how to identify a valid or a disqualified entry.
So any trade that happens in the black space up here is the inverse. Any trade that happens inside the highlighted region here is a reversal. Okay. So and you can even see that it hit here and then it came back down to that level again, and Scott didn't take it. Usually with the inverse, it's the first time only. And then the market went straight down. And just to put this in perspective to show how this method is, it came right down to this edge here, and then it bounced right back up to this area here and pushed a little higher, and then it started coming right back down. This edge was given to the students on Sunday night for Monday's trading. So think about that. Sunday
Actually,
night.
Saturday afternoon, if you want to be
Okay. Well,
specific.
yeah. But this encompassed the market profile through end of day trading on Friday and everything that happened before that from the beginning of the contract. So this is a $606 winner on the micro NASDAQ he's trading, by the way. Now here's another inverse long. So this was also Scott.
Yes, it
So
was.
actually, I probably put him in reverse order because he probably took this one before, right?
Yes. So he's
So,
$606 total. He made about 300 on each trade using this one was the ES, and I think he used the micros for the other trade.
yep, this was the ES trade. Don't mind the time. I forgot to change the time here. I'm on Central Time. He's on Eastern Time, but it wasn't 9:44. You can see the market was going sideways all along here, and then it took off to the upside, came up, extended a new high, pulled back down, and his entry was right where that blue caret is at 77.87. He went long on two contracts and he was out at 77.89.50. So that was 2.5 points on two contracts on the ES. And he was in this trade for maybe 6 minutes. Not a bad use, but he waited. If you notice that it's stamped where his buy and sell was, there was nothing in all this. He waited for it to come up here and pull back. Now, here's another example. This is somebody else. Pat, go ahead and explain this, and I'll try to draw along with you.
This is
starting with the
Wendell.
purple line.
Right. This is Wendell. The vertical purple line is the opening of the market. So the market opened, hit the top or the bottom of the HVA above it, sold off. Then it reverted back up to the same HVA edge. That's a valid trade. He used our software, which is called the executioner. He went short. He then spun around and did the same executioner trade long. Two winners. And what I'm going to tell you about Wendell is a master at managing how much he profits because when he was doing his evals, especially for this company, his first day he allowed his winner to run. He made a $1,900 winner. Now he had to make over 900 each freaking day to get qualified. And what happens is when you have sideways markets and junk, guys, these $900 days are very few and far between. You're looking to hit what you need to qualify and get out alive and come back the next day.
So the executioner software, he's doing one contract on the Dow, and each one of these white bars represents 377 executed trades. It's a 377 tick. It's a what we call open, high, low, close bar. Okay. So think about how quick you would have to be to take an inverse short, turn around and follow that with an inverse long, 2 for 2 on 2 trades that he had set using the executioner that he didn't have to manage because he was doing one all in, all out trade. And he's up $571. And this was all within the first, what, probably half hour that the market was open? Not
Probably the
even?
first 20 minutes.
Yeah.
Definitely.
So here's another trade.
Now, I want everybody to notice this, Joe. That prop account says take profit. So what did Wendell do? Wendell made his $571 on his Legends account, turned it off, booked the profit, turned on his take profit account. He started out with a break even, and then he got an opening range breakout, which is another words for a cowboy trade, which is something that we use on the initial bar. This is the ES, up $495 by the end of the day on what, 3, 4 contracts?
I think 3 contracts,
3 contracts.
775.
And
So
he's
all in,
done.
all out on the ES. Now these ones are 610 ticks.
Yep.
So a little bit bigger bars, but qualified trade. Here's the long. He wasn't in it very long. And even still, he probably would have had a qualified reversal here too.
Yes, he would have. It would have hit the bottom of that HVA edge. He would have had a long, which I would have told him to wait for it, but this is his go-to. He's taking a
Yep.
cowboy all day, every day, no matter what happens.
He actually would have made a little bit more if he
Yep.
if he waited. But either way, you're never gonna get the bottom and you're never gonna get out at the top. Again, $495 on this right here. And here's the beauty of take profit. Take profit allows daily payouts. So when you get to the past their eval and you get to their funded status, and you have a day where you make $500 and you want to pay yourself out, if it's within the rules, you could pay yourself out. All right, so that's what we have for the examples. So let's talk a little bit about the software. So we saw the Cowboy Trader, we saw the Executioner, and then we have what's called Presto, which was the plotting of the automated HVAs. They're all for NinjaTrader. Um, when you have a set of rules or strategy that's consistent, you want to have software that is going to help with your execution. Not to say you can't do this manually. You saw how quickly some of those trades unfolded. It's just easier and more effective to trade using software because let's be real, everybody else that you're trading with that is making money trading is probably using software or building their own. And most people that I know aren't capable of building their own that works to the level that we have. So I'm actually going to go back a couple slides. So this executioner trade. This executioner software is developed based on Pat's methodology. So it is calculating your reward to risk on your swing bar that is eligible for not only your entry, but where your stop would go and your profit target is all placed. As soon as you're filled, your stop loss and your profit target are in there simultaneously. The cowboy trader, okay? The cowboy trader is unique. Depending on the market, or you could be looking to go long or short. Your cowboy might have a long order and a short order on the screen at the same time. Whichever one gets filled first, you're going to have your coinciding stop loss and profit target get added immediately. So it's allowing you to take advantage of those really fast moving markets with high volatility. All right, Pat, the risk, your max risk, your max win profit targets and stuff like that. Why don't you give an example of what your max risk would be on, say, the ES and the NQ and the Dow? Just broad strokes.
What I would tell you is you're not going to risk more than 5 points on the ES, micro ES. You're not going to risk more than 8. On gold, you're not going to risk more than 3. Micro gold, you're not going to risk more than 5. NASDAQ, you're not going to risk more than 20. Micro NASDAQ, you're not going to risk more than 25. Generally, we focus on the micros now because the liquidity is abundant in those instruments versus the minis. You're going to get filled a lot faster, a lot better, and your exits will be much, much better. This is not an ego-driven game, guys. If you're going to sit there and say, well, I'm a minis trader, I don't trade micros, you're a moron. Plain and simple. One has nothing to do with the other. This is about making money as quickly and safely as possible. If you're one of these people who can't lower themselves to micros, you're not going to last very long in this business, especially if you want to trade the NASDAQ, because you will get your face ripped off. I don't care if you've got, let's say, one contract with a 20-point maximum risk, your max loss is $400. Don't be surprised when it's 700.
I can attest to the Nasdaq. I love trading the Nasdaq, but if you're going two contracts in the Nasdaq, you could be down 800 in a heartbeat. So the micro Nasdaq being down $80, think about it, if your loss limit's 2000 and you lose 800 on two contracts in one trade, you're almost halfway to your daily loss limit or your total loss limit. Some of them, your daily loss limit's only 1,000. So trading the micros is a lot better option because you can make $200 or $300 in the micro Nasdaq by trading multiples and scaling out of trades. So let's talk a little bit about prop farming. And I mentioned getting multiple accounts and stuff like that. Prop farming, a perfect example of what Scott or Wendell did. He's got multiple accounts at multiple firms. Now, if one firm allows you to get 5 accounts and you want to get 5 accounts there, nothing's stopping you from getting multiple accounts with another firm. So if you can have Legends, Take Profit, and Apex, and you have 5 at each, you got 15 accounts that you can trade at one time at 5 different or 3 different firms. Now, the beauty of the software and NinjaTrader in particular is that you can have your data connection for all three of them active at the same time. You can load 3 different micro NASDAQs or 3 different NASDAQ charts, 3 different ES charts, and you can put your software on each one of those charts independently and they will work independently. The executioner has an auto trade functionality to it to where it's going to read the HVA edge, qualify your trade, put in your stop loss and your profit targets as soon as you're filled. And then from there, you can either manage it manually or let it manage itself based on the parameters of either all in, all out, 1 bar or 2 bar trailing stop. But the way that you can really accelerate your profit potential is by prop farming and getting as many accounts as you can handle. And again, it's about the small wins. $200 a day over 5 accounts, you know, per firm, that's 15 accounts, turns out to be a really good month. Okay. Now, it's not to say that you're going to hit it all right away. You're not going to go and trade 15 accounts right away. The goal is to build up to this. You have a repeatable strategy that once you get funded on one, use the technology to help you become effective and efficient and spread it across multiple accounts. Okay. Now, I know some people try to trade multiple accounts in the past and you know, it's not an easy task. That's why we have software. But when you stay within your guidelines and your method and it's repeatable and you have software, it makes it so much easier to manage multiple accounts. Scott or Wendell, they could trade three different accounts at three different firms at the exact same time because they have the same software. And all they got to do is plug and play. All right. So let's get past the it's not easy part because we already talked to that, I think, ad nauseum. Pat, is there anything else you want to add before
Just wanted to say something. Here's a free gift for everybody. You probably don't want to trade more than 5 accounts total at one time because the trade copiers will most likely fail you if you're going to go that route. So just keep that in mind. It won't be the software, it'll be the trade copier. Sometimes it just fails when it's overloaded.
Yep. So depending on the trade copier you have, um, the free ones are always the worst. So there's a reason they're free. Just like
If you
education,
think
right,
it's
Pat?
expensive now, wait till it's free.
So, couple of key takeaways if you're
Joe,
gonna
just
go
like
down
trading
this.
education. If you think
Yes,
it's expensive now, wait till it's free.
wait till it's free, right? So nothing worth having is free. So, and what do they say? There's no such thing as a free lunch. Now, couple main takeaways, right? For one, your style of trading, you have to understand. You have to understand a methodology, but you have to also understand the time commitment that it takes to trade, and you should have clearly established goals. A long time ago, way back when I was in the financial world, we had what was called SMART goals, right? So you want to make sure they're specific, measurable, attainable, realistic, and time oriented. It doesn't matter what your goal is, just make sure you have a way to achieve it, that you also understand the profit targets and the drawdowns for any prop firm that you go to. I'm going to keep harping on that because I get asked questions every day from people that go and get prop accounts that are with our system that they have questions on the prop account. And yes, I try to stay in the know with a lot of them, but some of them do change, right? So you have to refer to whoever you got the prop firm, the rules that you agreed to when you signed up for it, and just make sure you understand it and that you refer back to it. Don't just read it one time. Understand what the goals are and what your goals are independently. If your goal is to make $1,000 a day, what's the best way to do it? Is it try to make $1,000 on one account every single day, or to make $200 in spread on 5 accounts? What's easier? I think $200 across 5 accounts is much easier than 1,000 on one account. And that's quite honestly a simple reversal trade on two contracts on the ES could usually yield about $225, maybe 250. So it's not hard, it's just sticking to the plan. And then, there's we'll call it natural skills, but sometimes people are just better at something than others, and you got to be okay with that. If this was easy, everybody'd be doing it. Some people it comes naturally, some people have to work a little bit harder, just like anything in life. All right. So I just covered all this. All right. So what does it take to get started? Um, Obviously you got to get a prop firm, but I'm going to talk about our system a little bit. And yes, it's quote unquote a class, but it's not really a class. It's more of a program. We have what's called the Future Starter program. The Future Starter program consists of the daily live signal room where Pat's in there reviewing your trades. There's a night class that we do. That's the classroom. It's the general classroom that on Mondays is more the method. Tuesdays might be more trade reviews. Those are at 7 p.m. Eastern, the live trading rooms all day long during the market hours. So we're available 5 days a week during the day. Monday and Tuesdays at least at night at 7 p.m. And then occasionally we'll do stuff on the weekends on Saturday or additional trainings in the room. We do webinars like this all the time. Our goal is to truly educate you guys on how to not only not need us, but become successful traders. Okay. The process of which you're going to go through, if you go through our program to become a successful trader, starts with the first 100. The first 100 is all about taking a reversal, getting your entry and your stop and your profit target in, letting the trade play out, win, lose, or break even. You send it in. You're going to email it to Pat with a screenshot immediately after that trade, including your PNL, and you're going to send it to him. He's going to look at it. He's going to give you feedback, and he's going to pull it up in the live trading room. The reason why we have you send in your P&L is because we want to make sure that you're not just sending your winners. You don't just learn from winning trades or losing trades. You learn from all your trades. If you do not send in your trades, it's going to be hard to give you feedback based on what you're doing, and sending them in timely is important. So if you take a trade at 7:02 p.m. Central Time right now, if you took a trade at night and you send it in to Patrick at 70 or let's say it's 9:30 in the morning. You take a trade, you send it into Patrick at 7 o'clock at night. You may not remember why you took that trade or what exactly you were, whatever justified it in your head. But if you send it in at 9:35, that trade's over, and you're in the room and you send it in, he pulls it up and he's going to say something along the lines of, Antoine, let's take a look at your trade. XYZ, this happened, good, bad, or indifferent, right? It's either going to reinforce what you were thinking in the moment, right? That positive reinforcement, or it's going to help you correct an issue that maybe you didn't see in the moment. So
And
then that way you
seven
can
other
learn from
people
it.
may have taken the trade, Joe, which
What's
is
that?
that positive reinforcement
Yep.
just hammered into you.
Yep. So trust me, it helps. And don't let the number 100 fool you. The idea behind that is to build a consistent habit. So you start with the first 100, you may send in 30 trades that are solid. And Pat says, "Hey, you got a good handle on the reversal. Now we're going to move you into money management, right? You're going to do the inverse. You might get some gap fills. And money management, you're going to learn how to scale up starting with one contract or two contracts, and then when to go from two to three, three to four, four to five, five to six based on monetary results. So essentially, you're at this point, you're going to learn how to make money and then keep the money that you make. And when you're done with money management, the first round, you'll have an option to do a second round if you want, but you're going to prove to yourself that you can make at least $8,000 in the minis or 800 in the micros trading, just going through the process. So think about what that does to your psyche. You've now demonstrated proficiency in not only the type of trade, but you've proven to yourself that you can actually make money doing this. On top of that, you're going to get trader checkups from myself or the staff here to check in and make sure that you're doing your part. We're going to try and hold you accountable. So, one of the things we ask when you sign up, make sure that you don't opt out of our text, because we do text to make sure we check in on you or try and schedule appointments. And don't opt out of the emails that we send you. We try not to blow you up as much as, with marketing stuff, but there's times that we do webinars that, or we send out communications that somebody may or may not get because they unsubscribed. If you want to unsubscribe to something, fine, we get it. Everybody gets a lot of junk, but if you're going to sign up for the program, which I hope you do, and you want to go down this inventor, make sure we can get a hold of you. That's it. Otherwise, we're not able to help you as much as we want to. Because believe me, we like the success stories. And after the trade reviews and after the live classes and all that stuff, you're going to have access to a campus library. It's available to you 24/7. So you can go through, you can watch short videos, you could do, there's reading material on there, there's just stuff to help reinforce the methodology and your understanding of the way that our students trade and how you're going to be expected to trade. So we don't care if you have 10 or 15 years of education under your belt from all these different online courses or in class courses. A lot of that tries to dazzle you with a bunch of BS and a bunch of indicators and a bunch of things that you really don't need. We've simplified it. We're going to ask that you forget everything that you've learned in the past in terms of how you apply it to what you're doing with us, because you're going to find that less is more in the approach and that all the other stuff is completely irrelevant. Pat actually has a term for RSIs. I don't think anyone actually knows what RSI stands for, but we know what it stands for. Right, Pat?
Yeah, so for all you guys that use technical analysis, first and foremost, technical analysis is garbage. They're all lagging indicators. If you can read price, you don't need technical analysis. It's the biggest con game that anybody's ever played in this industry. It's a fraud. I'm not going to go into it any further. But people use, oh, my relative strength indicator says this,
I
which
guess
my
Pat does
response
know what it
is
means.
it's a really stupid indicator.
So,
None of it has ever worked, ever.
so
If you put enough
again,
Fibonacci lines on a freaking screen, sooner or later something's going to bounce off of one of them. Okay.
or the 200-day moving average, right? You have okay.
200.
Who cares what happened with the previous oil contract when you're in the new oil contract or the new ES contract, right? Because all that matters is how it's trading now.
This is something that most people don't seem to understand. And apparently, I'm the only guy in the business that does, which is shocking to me because I'm dumb. So let's say a new contract begins in oil. Oil has a new contract every month. You get some bozo on television when the current price is 78. Well, the high of all-time high is 87. Nobody's traded the all-time high 8 years ago, dude. The contract was over 8 years ago. The only price that matters is the one that's being traded right now. And if you're long, you want it to go up, and if you're short, you want it to go down. Nothing else freaking matters. The only thing that matters is the high price of this contract, the low price of this contract. If you're looking for breakouts like that, nothing else.
All right. So that last program we talked about was the future starter package. Okay. So there's a couple of options to getting the future starter package. So it's $199 a month or $1,800 for the full year. So there is a savings if you do the full year. Now, what I'm going to go into is the Prop Trader Accelerator program. This is the one that includes the software. So the auto HVAs, um, everything that I covered in the future starter package, the classroom, campus library, all that's included in this package as well. So you got the auto HVA download, the executioner, which will do your reversals and inverses, the live trading room, small, usually on Friday, there's a little group session or something that goes over something prop related, depending. We do have a lot of people now that just, Friday morning, they do their trades and then they're like, peace out. And we don't blame you because Friday afternoon trading is terrible. So the ramp up classes is what we call those Monday and Tuesday night classes, the trade review program. You also have a couple of other softwares that we offer. We have the DaVinci. We also have as you saw, the Cowboy, um, the Orb opening range breakout. So we have a number of different softwares. But for somebody new and just doing reversals, the HVA download and the executioner are really what you're looking at. That's what normally would be 3,500 down and 350 a month. That's 7,350 if you do the math. We have two options. We have a 6 month PTA at only 3,000 or a 12 month at 6,000. So you save considerably by doing the 6 month or the 12 month versus doing the 3,500 down and 350 a month would normally cover the cost of the software and the education. Okay. I'm going to post some links in the chat. So while I do that, I want to give people an opportunity to ask some questions. And then Pat, if you have anything else that you want to add, please feel free.
I'm fine, Joe. I think you did a phenomenal job. It pretty much covers exactly what this is, what we do. Again, to clarify, we are not a prop trading firm. We
Yep.
teach you how to beat them using their rules.
So, and then I'm going to cover real quick the master key, which is everything. So the HVA executioner DaVinci, it also includes the orb, the opening range breakout trade, the cowboy trader, the live classroom, the campus library, the trade reviews, all of Patrick's mentorship. So if you want to learn how to draw your own HVAs, how to interpret the market profile, we have a drawing HVA class. We also have the accelerated market profile. We call it the AMP mentorship. We also have the ACT mentorship, which is advanced context trading. We have any new software that comes out over the course of the year while you're a member of the Master Key, you get first crack at it and you don't have to pay anything extra for it. Okay? That bundles a $10,000 price point. So you can save 2,000 right now on the Master Key with the coupon code MK2K. So what was once 10,000 will get bundled down to 8,000. And I posted that link, but you have to use the coupon code with this link that I just posted it, MK2K. The coupon code will not work with the future starter package or the PTA 6 month or the 12 month, just so you know. We're not going to give you $2,000 off an $1,800 price. We're not paying you to join our program. So if you have any questions or you want to meet with me individually, okay, you can go to go.targettrading.co/schedule dash Joseph Johnson. Actually, probably be easier if I just posted the link, which I will do. Just give me a second. This will get you on my calendar, or you can call me at 312-361-0090. You could also text me at that number. So I've posted a number of links, but let me ask the room. I still see quite a few of you in here. What questions do you guys have? Don't worry, you don't have to raise your hands. This was recorded, Gus. It will be going out. And just so you know, the coupon code and these promos are good from now until Sunday. So I'm not going to tell you, and you'll find that what we do here, we're pretty transparent with people. Um, I'm not going to tell you you have to buy it today to get the deal. It is going to be good for a few days, but I will say if you wait and it expires, I am not going to honor it. So this is something that, yes, there is an expiration behind the promo. Okay. As far as the future starter pack and the monthly or the annual purchase price, that's just the price. Okay. Whether it's today or next week, doesn't matter. The discounts or the promo pricing that we have is on the PTA and the master key. But remember the master key, you have to use promo code MK2K. Any questions? You guys are very welcome. We do appreciate your time. I know we went a little bit longer than an hour, but um, questions, feel free to just type them in the chat. We'll hang out for a few minutes just to get questions answered or people an opportunity who might be a little bit slower at typing. This would be nice if we had everyone on Zoom and you could just chime in. Actually, is there a way to activate anyone's microphones? Probably not. Not now. Yeah, that might be dangerous, right, Rick?
Hell, I love the chaos.
I can just, in my mind, I picture somebody right now, one finger typing. So we'll give him a few, we'll give everyone a few minutes. Pat thrives on chaos. Yes, he does. Oh, you know what? Let me check the Q&A.
Kurt, don't think I did not appreciate your observation earlier. Thank you.
Did we do that good of a job that nobody has questions?
Well, I think it's a lot to take in, Joe. You know, we sort of may have thrown some cold water on some ideas that maybe people didn't think of before. And maybe you want to get educated before you start wasting money over and over again on reinstating evals that you keep failing. because I can tell you guys something right now. How do I know the overwhelming majority of people are not funded? Because the participation is so low in the futures and commodities market that if there were tens of thousands of funded traders, the volume would be what? Probably 5 times more than it is in each market right now.
True. All right. I'll post the links one more time. First, my schedule. And then, yes, this is recorded, so it will go out to everybody. Um, so here's the master key link. Like I said, you got to use the promo code MK2K. It is case sensitive. Helps if I copy the right one. I just posted my other link twice. Hold on. Okay, apparently it's not letting me post it again. Let me just go back. I'll post it this way. So MK2K. There we go. And then more importantly, I will post the links for the future starter package and the 3 and 6 month options for the prop trader accelerator. Well, Pat, I appreciate your time. I know it's a little bit later where you are than where I am. So if nobody has
About an
questions,
hour. No big deal.
it's your bedtime. I know it.
I'm old.
All right. Thank you guys. We appreciate you being here.
Yeah, guys,
I'm
thank
going
you. Have a
to,
phenomenal night, everybody.
all right. I'm going to stop sharing so you guys have a wonderful rest of your day.